There we go, everyone. Thanks for joining me. I do have a very special guest today. I'm excited to bring him in, but first, as a reminder, I'm Rob Tatro from robtatro.com, portfolio manager here at Canaccord Genuity Wealth Management and at the Tatro Wealth Advisory Group. Really excited with our guest. I'm going to bring him in right away here. None other than, I call him KV, but Kevin Vandermeer. He's a CFA. He's a fellow of the Canadian Securities Institute. He's also managing director, investments and advisory solutions at Canaccord Genuity Wealth Management. Kevin, thank you so much for joining us and welcome.
Thank you for having me, Rob. And it's great to be.
There are some headlines today. I'm just looking here at the screen for the end of the day. It looks like the Dow finished up about 500 points at the end of the day. The TSX finished up 200 points, closed at 15,389. The TSX 60, 928. It was a big day today, 2% gain pretty much across the board. Gold was up, oil was up, WCS, which is our Western Canadian Select, was up. What are your thoughts on just a big Monday like that? Usually we don't see this type of movement on a Monday.
Yeah, very unusual, but I think you got to sort of take into context, obviously, Friday was especially weak, and last week was weaker. As we're going to talk about, there is still a lot of cash on the sidelines, and I think there's more people that are trying to find a way to come in, get involved in the markets. So last week. A week last week, and not entirely surprising to see a bit of a bounce today, I think.
This is a chart here showing it's a CNBC chart. About half of the U.S. population is jobless. I don't know if you can see the percentages here, but the top is about 65%. This is the total population that has jobs. 64.7% was the peak in April 2000. That is 20 years ago, Kevin. Yeah. And we dipped now at about 52%. This is an American stat, obviously. A dip to about 52% of the population that has a job right now. So that's, would you say, troubling?
It is really unprecedented, as we all know. Anybody who's been a student of economics or a student of the markets, this is, nothing like we've ever seen before. But I think you need to put this in context. This is not a traditional recession in the likes of which, most people would have experienced in the past. This is really a pause, a regulatory pause that's been sort of forced upon us all for reasons that we all know and understand. What's interesting and kind of there's some really interesting stories coming out of the U.S. I just read one moments ago. As the government is putting money into the economy to support people that can't go to work, people who are getting $2,000 in New York, very different. What you can buy in New York for $2,000 is very different than what you can buy in Florida or New Orleans or elsewhere in the U.S. And so people are going out and they're spending money on TVs and call them toys. So I just read just before coming on here that some of these dealers
discretionary spending
is just off the charts.
Yeah, well, we know, I talked about on the show, you can't get a hot tub in Winnipeg, Manitoba. You can't get someone to redo your landscaping. You can't get someone to do your deck. You can't rent an RV for a weekend or buy an RV. All of those are what I'm calling the COVID trades. Yeah. Just people wanting to spend on this discretionary basis, and the lack of travel is putting all of those into question as well. A couple other headlines today. Some companies filing for bankruptcy protection in Canada. This one hurt me when I saw it. Cirque du Soleil. Did you see that story? Cirque du Soleil, as you guys might say.
So they're unfortunate. I mean,
they're laying off 3,500 people.
Yeah, I mean, I think they were looking for some people to really support them, and I know the Quebec government was going to try to kind of help them out a little bit. But I think
they were looking at
it's done. I don't think it's done. It's sort of they're protecting themselves, and I think hopefully we'll all get to see those amazing shows, whether they're in, Vegas or in Montreal or Toronto or some of the other cities. I mean, just amazing work by that company of actors and performers. But just unfortunate.
What's your favorite Cirque show? Mine is Beatles Love. It was so good.
Yeah, I'm trying to think of the one I saw. I think it was it had a water feature in.
In Vegas. I believe it's called O.
Oh, that's right. Yeah,
it's like an O.
Yeah,
and that's a French play on water. But and then in the U.S., Chesapeake Energy. This was a $400 stock 6 months ago, and now they're pretty much belly up. The stock's at $10 today, down like 98% or whatever it may be. We thought we wouldn't see that one go belly up, but here we are. That was a I think they were fracking or they were in the shale, if I'm not mistaken.
Yeah. I mean, I think that without going into too much detail, I think you're going to see more out of the U.S. shale. And that's because for a long time, Saudis have asked well, not to get into too much detail, but the U.S. shale guys have been really overproducing. And as a result of that, Saudis have been losing market share. And that's why the Saudis a couple months ago responded so hard in cutting price. And they knew that once they cut price, shale production would no longer be profitable. And as a result of that, we're going to start to see some cutbacks, which is exactly what Saudi and OPEC wanted, because they want to get their market share back. And what you're seeing is the result of that. So it's unfortunate, but I think, Rob, we're going to see more news like that out of the U.S. shale.
It's what they want to see, obviously. That's why they're doing this, right?
Yeah.
580 points we closed today. So that's definitely a good Monday for sure. Another story I want to touch on here. This one was an interesting one. Facebook has been in the news because a lot of companies are pulling their ads. Pepsi, Starbucks, a couple other companies have pulled their ads from Facebook as a result of this civil unrest and the position that Facebook has taken on what's happening in the US. Surprisingly, the stock was up today. It fell early this morning in trading, and then it rallied throughout the end of the day. I mean, it's been down a lot last couple of weeks. Any comments on that?
Yeah, I think that, look, we're all very sensitive to the the social issues that are arising out of some of the things that have happened in the U.S., whether it's protests, etc. And I think the general corporate environment in the U.S. is trying to figure out what its role is, and they don't necessarily want to be complicit in something like Facebook, which I think many people have been critical of their inability to kind of stay consistent with what they've declared on their website they're going to do. They've kind of bent the rules a little bit. And so, you've seen big names like Pepsi, you've seen Verizon step back, Coke has stepped back. So these large corporate entities are stepping back and saying, we're not going to advertise on Facebook for 30 days until we can properly assess, that this is not a platform that's going to be being used for negative reasons. And so they're just being very, very careful with their brand. And I think Facebook is incredibly important to so many small businesses, so it's not going away. But it's more of a message to Facebook management and ultimately its shareholders to kind of encourage Facebook to be a little bit more, authentic to what they've actually stated is their own personal rules or their own code of conduct.
Speaking of Facebook, their revenue from the two presidential candidates in the last week. So President Trump ramped up his spending in the last week, $2.2 million spent on Facebook ads. That's about 50% more than Vice President Biden, former Vice President Biden. But more importantly, what surprised me, so they're going to obviously spend a ton of money on Facebook ads here all the way to the election. I don't think that would surprise anyone. What surprised me was that the June number for Biden came in almost double what Trump spent on Facebook ads. So I was surprised to see that. But we do know that Trump is going to open up the wallet here and spend on Facebook. I think that wouldn't surprise anyone.
Yeah. It's a great way to play the election as Canadians is, buy some Facebook and pay the spend. For sure. And Biden obviously leading, so Trump's going to need to spend some more.
Last story I want to talk about here, it's a Canadian story. Tim Hortons app under investigation for data tracking. So this is potentially tracking consumers prior and after purchases and stuff like that. I don't think anything's been proven here, and I'm not alleging it has been. It's just a story on BNN and Bloomberg. But still, the stock is up 5% today, QSR. That stock is not quite as high as it was kind of about a year ago, where it was like $100 or so, $105, but it's still at right around $75.
Yeah, I actually didn't see that story, but Tim Hortons actually came out, or they're called, International Brands is the...
Restaurant Brands International.
Yeah. Restaurant
QSR.
International, the QSR is the ticker, and they actually came out this morning with a report highlighting they own Popeyes and they own
Burger King, I think.
Burger King, and then obviously Tim Hortons, and they gave a corporate update this morning that came out before the market opened, and I think the general tone there was that they're seeing better traffic, and they've opened up more stores faster. So that's what I think you're seeing today in the market is that kind of corporate update was more positive than I think most of us have, what the market was anticipating.
There's your 5% bump on the stock. It was a $40 stock in the middle of March, and it's now at $75.62. Hey, last article I said last one. This is really the last one. There was an article that you highlighted about the impact of Biden as president to the Canadian stock market, and it's a report that was issued, I believe, by CIBC. They looked at most of the sectors, but financials, materials, tech, and utilities, they said could actually have a positive impact by President Biden, even though most of the market's expecting a negative impact on the stock market, mostly because of corporate tax rate. They outlined 4 sectors that could potentially positively benefit: financials, materials, tech, and utilities. So there you go.
Yeah, I was just going to say, I did see that article, and everyone right now, I think it's unusual for a sitting president to be unseated. The only time a sitting president is unseated is usually during a recession. And we are obviously clearly in a recession, but this recession is a little bit different. And I think right now, what's unusual is that Biden is leading by 14 points. Will that close over time? Probably. But that's not necessarily what the market thought would happen. And as a result, you're seeing strategists come out and we're starting to think about what the world might look like under a Biden administration. And I think that the key takeaway there in that, what they were trying to hint at, was taxes are probably going up. And like, if you don't think your taxes are going up, the taxes are going up everywhere. Under a Biden regime, taxes are going to go up faster than under Trump, and you're going to probably see more regulation. I think that was kind of the essence of the article. In highly regulated sectors of the economy will probably benefit more than others. So I think that was the essence of it. Not
cannabis.
To go on too much about that.
No, and cannabis is one that they highlighted specifically.
Yeah, which actually that was the one I found interesting. But every state and municipality in the U.S. is going to need more tax dollars. And so cannabis is being treated much like tobacco and alcohol, is a source of revenue. So I don't think states are certainly not going to pine on whether it's, there's no moral issue here or judgment. What they're really looking at is an opportunity to garner additional revenues and taxation as they've spent and are, challenged financially.
Yeah, I was a big cannabis bear at the top. I went out and I made videos and I went on BNN and I said, this is potentially a bubble, guys. Be careful, be careful, be careful. And now I'm starting to look at these prices and goodness, they've fallen a lot. There's going to be a point here at some point where they're going to be extremely attractive.
Yeah, I agree. And I think you're going to see consolidation. So just guys have got too many of them. They're going to have to consolidate, and there will be, I think, some good opportunities to kind of pick through the rubble here and take advantage of some things.